Here's a detailed summary of Altria's MO 2026 Q1 earnings call, focusing on key financial metrics, forecasts, risks, highlights, lowlights, and important executive statements, overall performance and financial highlights. Altria reported a strong start to 2026, with adjusted diluted EPS growing by 7.3% in the first quarter. This growth was supported by their highly cash-generative businesses, allowing for significant returns to shareholders through dividends and share repurchases, while also investing in their long-term vision. Key financial metrics: smokeable products segment, adjusted OCI, operating company income, grew by 6.3%. Adjusted OCI margins expanded to 65.1%, an increase of 0.7 percentage points year-over-year. This was supported by net price realization of 6.3%. Reported domestic cigarette volumes declined by 2.4%. When adjusted for trade inventory movements, domestic cigarette shipment volumes declined by 4%. Industry-level cigarette volumes, adjusted for trade inventory movements, declined by 5%, showing a moderation in decline for the fourth consecutive quarter. Marlboro maintained its strong position in the premium segment, expanding its share to 59.5%. Basic continued to capture share in the discount segment, growing its retail share by 2.4 percentage points year-over-year. Total PM USA retail share grew by 0.4 percentage points versus a year ago. Cigars. Reported shipment volume was down slightly by 0.2%, with John Middleton outperforming the industry due to Black and Mild. Oral tobacco products segment generated over $400 million in total adjusted OCI in Q1. Adjusted OCI margins remained strong at 67.4%, down 1.8 percentage points from a year ago, impacted by Helix marketing investments and product mix. Reported shipment volume decreased 3.1%, with on! growth offset by lower moist smokeless tobacco volumes. When adjusted for trade inventory movements, Q1 oral tobacco products segment volumes declined by approximately 8.5%. Oral tobacco products segment retail share declined by 5.5 percentage points. On! Portfolio shipment volume grew nearly 18% to over 46 million cans. At retail, on! and on! plus together represented 7.8% of the total oral tobacco category. Investment in ABI, Anheuser-Busch InBev recorded $160 million in adjusted equity earnings, up 9.6% year-over-year. Shareholder returns paid approximately $1.8 billion in dividends. Repurchased 4.5 million shares for $280 million. Had $72 million remaining under the current share repurchase program. Balance sheet: retired over $1 billion of debt. Total debt-to-EBITDA ratio was 1.9x, in line with their target. Management's forecasts and guidance. Full year 2026 guidance reaffirmed their expectation for full-year adjusted diluted EPS in a range of $5.56 to $5.72, representing 2.5% to 5.5% growth from a 2025 base of $5.42. EPS growth phasing. Due to strong Q1 performance, they now expect 2026 adjusted diluted EPS growth to be more balanced between the first half and the second half of the year, a shift from prior expectations of a second-half weighted performance. Factors influencing guidance. The reaffirmed guidance range contemplates the impact of moderated industry growth in combustible and e-vapor products, and increased macroeconomic uncertainty facing adult nicotine consumers. Significant risk factors. Macroeconomic environment, elevated everyday expenses, higher gas prices, and general economic uncertainty continue to weigh on discretionary income for price-sensitive consumers. Regulatory landscape. The e-vapor category is significantly impacted by the prevalence of illicit flavored disposable products and the slow pace of FDA authorizations. Continued regulatory scrutiny and potential changes in regulations for nicotine products are always a factor. Competition. The nicotine pouch category is highly competitive. Illicit e-vapor products. The persistence of illicit flavored disposable e-vapor products continues to distort the e-vapor market. Key highlights: strong EPS growth, achieved a solid 7.3% adjusted diluted EPS growth in Q1. Resilient smokeable business, demonstrated strong financial performance with OCI growth and margin expansion, supported by pricing and moderating volume declines. Marlboro's premium strength continued to strengthen its leading position in the premium cigarette segment. Basics discount success effectively captured share in the growing discount cigarette segment through its total portfolio strategy. On! Nicotine pouch growth reported strong shipment volume growth for On, reflecting continued demand and the national expansion of On! Plus. On! Plus FDA authorization. On! Plus is the first and only product authorized under the FDA's pilot program for oral nicotine pouches. Moderating cigarette volume declines showed a fourth consecutive quarter of sequential year-over-year moderation in cigarette volume declines. Shareholder returns continued to return significant capital to shareholders through dividends and share repurchases. E-vapor enforcement progress noted increased enforcement activity and supply-related disruptions slowing demand for illicit flavored disposable e-vapor products. Key lowlights: oral tobacco shipment volume decline. Adjusted shipment volume for the oral tobacco products segment declined by approximately 8.5% year-over-year, primarily due to On! Plus pipeline volume in Q1 and elevated competitor volume in 2025. Oral tobacco segment retail share decline. Oral tobacco products segment retail share declined by 5.5 percentage points. Impact of macroeconomic pressures. Trade-down dynamics in the cigarette segment impacted Marlboro's overall retail share due to increased pressure on consumers. Most important statements from management. Billy Gifford, CEO. We delivered a strong start to the year, growing adjusted diluted EPS by 7.3% in the first quarter. Our highly cash-generative businesses supported significant returns to shareholders through dividends and share repurchases, while we continue to invest in support of our vision. On the e-vapor category, consumer demand for e-vapor products demonstrates the potential for the category's role in tobacco harm reduction. Progress continues to be constrained by the limited number of FDA-authorized products. He emphasized the need for a more efficient and predictable authorization process. On his departure, this will be my final earnings call as CEO. It has been a privilege to lead this company. I do so with full confidence in our leadership team and the strategy in place going forward. Sal Mancuso, CFO, on smokeable segment performance. The smokeable products segment delivered strong financial performance in the first quarter, reflecting the continued resilience of our smokeable business. On guidance, we reaffirm our expectation to deliver 2026 full-year adjusted diluted EPS in a range of $5.56 to $5.72. As a result of the strong first quarter performance, we now expect 2026 adjusted diluted EPS growth to be more balanced between the first half and the second half of the year. On macroeconomic challenges, the macroeconomic environment remains challenging. Elevated everyday expenses and higher gas prices later in the quarter continued to weigh on discretionary income. On shareholder returns and balance sheet, we remain committed to returning significant value to shareholders and maintaining a strong balance sheet. In essence, Altria had a robust Q1 2026, driven by the resilience of its smokeable products, growth in oral nicotine pouches, and prudent financial management. While acknowledging ongoing macroeconomic headwinds and regulatory complexities, the company reaffirmed its full-year guidance and signaled a more balanced earnings distribution throughout the year, while preparing for a leadership transition.